What's up, owner investor? In this video, we are going to figure out how Costco makes money. So, going off of the previous example where we talked about Airbnb, right? This kind of breakdown all the way from the addressable market down to earnings per share. We're going to do the same thing for Costco in this video, and then Spotify in the next video, and then basic fit in the last video in this section. So what I want you to do is go ahead and download the PDF on this page. It should be called Costco KStocks_2. So in this super simple PDF, 7 pages, I have kind of picked out the key numbers from their filings and also did a little Google search here for you. And so these 7 PDF pages should have enough information for you to recreate what we did for Airbnb, right? This thing, except for Costco, right? So I would crack open a new tab and then do the exact same thing as the practice exercise. If it's taking you more than like 10 to 15 minutes, just come back or review the Airbnb video, or maybe just come back and watch me go through it. It should be a fairly quick exercise. So good luck. All right, so now that you have gone through that, let's set this up for Costco. Okay. So crack open this KStocks thing and the Costco model. Okay, so let's take a quick step back about how Costco makes money, right? It has a bunch of these warehouses all over the world, right? We can see here. Yeah, these are all the countries that they operate in, but this doesn't give you a breakdown of how much in each country. But they're in, I think this is like 14 or 15 different countries, right? So they have a bunch of these warehouses. They buy a bunch of stuff to sell in the warehouse, right? The inventory. And then they sell it to customers. And then they buy more stuff and they sell it to customers. So it's really you can think about the unit economics of this business as either from the customer perspective or from the warehouse, or you can say, okay, I'm going to do number of warehouses, customers per warehouse, spend per customer, or you could just do like revenue, market share. There's a few different ways to break this up. So I'll kind of walk through like how I do it. So I like to all right, so we have, what years do we have? 2020, 2021, and 2022. 2020, 2021, 2022. So I would actually start off with the warehouses. So warehouses, so 795, oops, right here, the 795, 815, and 838. Color this blue and make this a number. Don't like decimal places. Okay, now the next thing I would do is actually break this up into customers per warehouse. But obviously they don't kind of give you the customers per warehouse number, they give you customers, right? And before we type this in, I included this to kind of just show you a really important and like profound concept in any kind of like retail, or yeah, like any kind of business, right? Like in most businesses, the unit is either, every business has customers, right? So you can definitely break up every business into customers. And what this is called is, it's like cohort analysis. So we can see that the older warehouses, they ramp up over time, right? So new warehouses start off with a lower productivity in terms of sales per warehouse, and then older warehouses generate a lot more in revenue per warehouse, right? And so when we, in a couple of modules, when we get to like forecasting growth, this is a really important concept of where growth comes from, is the warehouse is kind of maturing over time and increasing their kind of penetration rate or market share within like the community that they're in. Okay. So this isn't, I just wanted to kind of put this out there for you to kind of, start kind of creating the inference in your mind, and have this in the back of your mind of, okay, this is one way to kind of break up the unit economics is sales per warehouse. But and this is going to vary how you break this up, break up a business, and it's going to depend mainly on what the company discloses, right? Some companies disclose a lot of information, others don't. And this is also beneficial if you're a private business owner or if you're looking at a private investment opportunity, where you can ask for more information and you know exactly what to ask for, right? In private deals, oftentimes what you'll find is like the private business owner, the current owner, will just dump like a shitload of information on you. And what you're really looking for is just a few key metrics, right? There's like Warren Buffett often talks about how when someone calls him and says, "Hey, are you interested in buying my business?" Within 5 to 10 minutes, he has an answer. But obviously Buffett is on a whole nother level. But being able to break up the business into these few key metrics and understanding like what drives performance is a big part of being able to get to that level of, within 5 to 10 minutes, make a, $100 million or $1 billion acquisition, right? I mean, it doesn't fully get you there, but it's a big step, right? So let's see. So I would like to kind of break this up into paid members. You can also do card holders. You can go either way with that. So 58. This is nuts, man. Costco has 66 million paid members and 119 million households, right? In the context of the U.S. population, which is like a little over 300 million, that's nuts. But in the context of like the global population and where that penetration rate could get to, it's still like pretty small as long as they have a winning customer proposition, right? As long as they're solving a problem that no one else can solve it as well as they can, you can kind of expect that to continue to grow, right? But I'm getting a little ahead of myself here. So we'll just call it just to have paid members just to make sure that keeping it consistent. So 58.1, I'm just going to enter it in millions, 61.7. And I apologize, there's actually no, I didn't put like the key here to tell you that this is in thousands. But yeah, this is in thousands. Sorry about that. 65.8. Okay, so now we can calculate the number of paid members per warehouse. So because there's a difference in units here, we're gonna have to take this, multiply by 10 to the 6th, multiply by a million. That okay, so I mean that's pretty remarkable, right? The average Costco warehouse has 78,500 paid members on average. This is obviously going to vary quite a bit from one warehouse to another, but this is kind of a rough average number, right? Because again, we're going for accuracy, not precision. That's mind-boggling in retail. That 78,500 customers per location. Okay, so now what I would do next is spend per member. Oh, actually, I would break this up a little bit more into, yeah, I would say membership fee per paid member. And I'll explain why I'm breaking it up this way. Membership fee revenue. Okay. So the membership fee revenue is 3541 3877 4224. Whoops. The reason I want to break up the membership fees from the actual merchandise sales is because the membership fees come in at a much higher incremental margin, right? The membership fee revenue. The membership fee revenue, geez. The membership fee revenues don't really have any costs associated with them, right? So when Costco increases the price of membership fees versus increases the price of merchandise revenue, that flows through to diluted EPS in two different ways, right? Because when they hike the price of merchandise sales, that comes in at a lower incremental margin, right? So that means that when we forecast growth, we need to break up these two lines of business so that we can be more accurate in forecasting growth. Okay. Paid member, and then this will be merchandise spend. So actually what I'm going to do here is going to insert row, insert row, insert row. So gross margin, this is coming in at 100%. And then this will be merchant, so membership fee, gross profit. Okay, and then I'm actually just to keep this like really clean, I'm just going to put in some headers here, right? So unit, let's call this economic units. Just so it's easier to read when we come back to it later. Membership fees. And this will be merchandise. Okay, so the merchandise spend, merchandise, we'll just call this merchandise revenue. And revenue is the same thing as sales. So they break it up here, 163,220, 163,220, 192,052, 222, 730. And just to give you like this is nuts. I mean, Costco is like I think the world's third largest retailer. They do $222.7 billion in sales every year. It's crazy. Okay, now we can calculate what the spend per paid member is. Right, so this is telling us that on average, a member at Costco spends $3,400, right? And that includes a lot of their locations in the U.S. have gas stations. So it's not just like grocery spend. So you can kind of compare that to what the average household in developed countries spends on, groceries, gas, all the different kind of categories that they're in, right? Again, this is something we'll get into in the later modules, but I just want to again set that up. Bottom border, okay. And then this comes in at a different gross margin, right? Gross profit. So 144,939 is what they disclose here. So we're just going to do this minus 144,939, and then this minus 170,684, 170,684, and then this minus 199,382, right? This right here. Okay, so we can see that and I think I misspoke earlier when I said like price increases flow in differently. Only to the extent that they're linked to costs, right? So Costco, I should have mentioned this, Costco doesn't really play this game of like hiking prices just to, make more money. Costco does like a fixed markup. And the reason the gross margin changes is because the mix of different categories of stuff that people buy is changing. So I think gasoline comes in at a lower gross margin, and so that tends to decrease gross margins, but it increases spend. But that's like a detail like we don't need to get into. But if the only time that Costco really increases the cost of like the stuff that they sell is when the costs for them to buy from the manufacturer goes up, right? So in that case, when Costco does hike prices, it's being offset by um, these additional costs, right? So that means that if Costco increases price by, or if Costco's cost of goods increases by 1%, and they like cannot eat it themselves, and they have to pass it on to customers, then they'll hike prices by 1%. And then, so that means that gross profit grows by 1%, and then that'll flow down your income statement. But if they increase the membership fees, then that comes in at 100% incremental margin, right? So there's no costs associated with the membership fee. So when that increases, that means that earnings will increase by a lot more than when the merchandise spend increases. Okay, and then we'll call this section the consolidated. Operating expenses, operating profit. Again, Costco is another like net cash business, right? If you compare the cash and short-term investments to the debt, the current portion, which is 799, but also the long-term portion, right? So again, I'm going to just ignore like the non-operating costs and the any kind of interest expense, which is basically just offset by interest they earn on the cash. All right, so operating profit. Five, 6708, 7793. And maybe as I'm going through this, it might not make sense for you to go at 2 times speed. Maybe you'll have to slow it down a little bit to kind of let this stuff sink in. So in order to kind of back into the operating expenses, I mean, look, like we can also just, I think I included a little SG&A section here, right? Yeah, we can just type this in instead of working backwards. So minus 16,387, and then minus 18,537, minus 18,537, minus 19,779, minus 19,779. Throw a little bottom border on here, but not the thick one. Okay, so now we have to do this plus this, right? Because there's two lines of, like two segments where gross profit is coming from. So we want to add both of those. Okay, and then this is another thing when we're typing stuff into Excel, just making sure that we typed everything correctly. So compare this 5435, 5435, 6708, 6708, 7793, 7793. Cool. Okay, so I didn't make any typing mistakes. Just say 25%. Again, like spend more time on that later on, but right. So this times 1 minus 25%. Make this a number. Whoops. And then shares outstanding. This is like the weighted average, and you want to use ending balance, but that's okay. Just ignore it for now and just run with this. 443,901, 443.901. Because remember, this is in thousands now, right? Because the units have changed here. 444,346, 444.346, 444,757, 444.757. Okay, then I'll just throw a little dollar sign thing on here. Okay, cool. So $13.14 of EPS, nice steady growth here. Okay, so now there's a question of the addressable market, right? So what I'll do for that is I'm just going to add a couple rows in here. And the reason I've included the global retail spend, obviously Costco isn't in every country, and so you can be more detailed about this and say, okay, well they're only in these countries, and you add up kind of the retail spend for those countries separately. You can even go even more detailed and say, there are just some areas even within the United States that Costco will never get to, that market will never be addressable. So there's just a lot of different ways to make this more detailed. But, for now, we're just going to run with this $25.8 trillion of TAM. Let's call this the global TAM. And then market share. So this number isn't really going to drive the model, at least not the way that we've set it up right now. But it just gives us like some context. It gives us a little bit more context as to like what drives this number, how much room does it have to run in terms of growth, all that stuff. Okay, so I accidentally added this to the membership fee section. Okay. All right, so make this a percentage. Okay, so basically Costco is like 0.9% market share. And the importance of that is basically that, if you think that Costco can do like smaller format stores, and that if you really think that Costco is the low cost player in the world, that they should be able to add more and more stores and take more and more share as time goes on, right? And the idea is that, because they're at 0.9%, maybe they have room to grow, or maybe their addressable market is capped, right? That's a debate or a discussion that we'll have in later modules, but it's important to kind of set that up here so that it's just there in the Excel, and so we're thinking about it, right? All right, so if you didn't get these numbers, right, the $9.18, 11.32, 13.14, kind of just go back and compare to what I have here. And if I made a mistake, let me know in the comments, and I'll apologize in advance, and we can fix it. But yeah, that's it for this video. As always, post comments, questions, random thoughts below, and let's keep going. I'll see you in the next one.